Managing partner of Safeguard Investment Advisory Group. Reid, the name of your company is Safeguard Investment Advisory Group, so talk to us about what investors should be doing to safeguard their portfolios. I'm sure you haven't heard that one before.
No, yeah, I've never heard of it. So let me kind of set the stage. In retirement, if you think about it, because pensions are being done away with, over the last decade, I've seen a huge shift. So think about retirement when it comes to the 5 years before you retire, the 5 years after you retire are the most important because they're going to set that foundation. And when there's no do-overs in that type of time frame, you have to factor in and set up a strategy. So we're fortunate enough to be watching March Madness. The NCAA tournament's been going on. It's been amazing games all the way down to the wire. So what good is having these players doing these games without a strategy behind it? So one of the things that I am looking at for people in that retirement is right now inflation. This is in everyone's minds. Cost of goods are rising rampant. You know, my son just 2 weeks ago was complaining about how much it cost him to fill up the gas tank, and I'm the one paying the bill. And so the other factor that's going on is there's shrinkflation going on. And so manufacturers are realizing that people are paying attention more to the cost rather than the packaging. So inflation is going to be really an issue for someone who is and is approaching retirement. The other thing we're going to have to contend with is these geopolitical issues with the Russia-Ukraine and how gas prices are going to continue to rise, with Russia being almost a 10% producer of the world's oil. And not to mention the midterm elections that are coming. I know that's not going to be fun for everyone. Federal Reserve hikes. So this is going to also impact us. So how many more hikes are coming? We expect, between 5 and 10 of them, and that will be dependent on how well the economy is moving forward. And I have to tell you guys that with 30 trillion in debt, we have to be realistic about where our taxes are going to go moving forward. And this by far is our largest expense. And with the sunset clause expiring December 31st, 2025, we have to understand that this is going to be another hurdle that we're going to have to overcome.
So what sectors or companies are you seeking safety in, given all of these risks that you've just laid out?
Sure. So we're looking at utilities being one of them. Because they're paying great dividends, so that will absorb some of that risk. Consider energy costs, financial sectors. With interest rates rising, we can see financials doing really well. You can look at commodities also. But the other factor is, again, if you're within that 5 to 10 years of retiring, considering setting up a foundation, possibly an annuity for income, and then allowing the rest of your money to grow and you're not having to tap into it. Rule number 1 of compounding is it must be left undisturbed.
For those of us who aren't 5 to 10 years from retirement, unfortunately, it feels more like a million years from retirement. I do want to ask you about tech stocks, because the NASDAQ, of course, is in correction territory, but some of these high growth stocks are 50, 60% off their highs. At what point do they become attractive for maybe some of your younger clients?
I really like tech stocks. I looked today, QQQ as an example is down somewhere in the neighborhood of 12%. And if it's within your IRA, consider doing Roth conversions without blowing up your tax rate, because you'll be able to convert that at a discount and have the rest grow tax-free. But I do really like tech for the long haul, because I don't see any issues on that sector. I would warn people stay away from bonds.
Oh, bonds.
Sorry,
okay. I thought you were going to warn people from staying away from companies with no earnings, but staying away from long-term bonds.
Correct. Because we realize interest rates are rising, I would caution people on buying long-term bonds because they're going to get hit quite hard short-term for at least.
I'm curious, what is your client's biggest concern? Because there are so many things so many risks right now. But when you talk to your clients, what is their biggest concern at this point right now?
So every year we survey clients, and keep in mind they're within that window of retiring, and it seems to be that the income part of it is their biggest concern. They don't want to outlive their money. Since they do realize that retirement is 20 to 30 years of unemployment, they have to make sure that that nest egg is providing for them to do the things they want to do. So that's why considering something that's safe to provide you the income will allow you to be disciplined on the growth side.
Certainly aren't getting a lot of returns in cash, so that makes sense. Many thanks to Reid Abedeen, Managing Partner, Safeguard Investment Advisory Group. Appreciate your insights.
Thank you for having me.